Over the past weeks, I've posted many videos explaining why I'm very bullish on REITs today. In short, their share prices have crashed even as they kept growing their cash flows, and as a result, REIT sector valuations are today the lowest in a decade. Right now, it's not uncommon to find REITs that are priced at a 30, a 40, or even a 50% discount to the net asset values. What this essentially means is that today you have the chance to buy real estate at a steep discount to its fair value through the REIT market. But that doesn't mean that I'm bullish on every REIT. The REIT market is vast and versatile, and while I think that most of them are today opportunistic, there are quite a few REITs that I wouldn't buy. Some are over-leveraged, some others are poorly managed, and some are even overpriced even following the recent crash. Hey everyone, this is Jussi. I'm a CFA charter holder but not a financial advisor, so make sure to do your own due diligence. I run a small investment firm that specializes in REIT investing, and in today's video I'm going to talk to you about 2 REITs that I would avoid in today's market. Before I get into it, could you please do me a huge favor and like this video? That will really help me a lot to grow this channel, and also make sure to subscribe to not miss any of our future investment opportunities. So the first REIT that I would avoid is called Welltower, ticker symbol WELL. This is the biggest healthcare REIT in the world. It owns a diversified portfolio of mostly senior housing communities, medical office buildings, life science buildings, as well as skilled nursing facilities. It is what you would commonly describe as a blue chip in the REIT sector because it has an exceptional track record, a strong investment grade rated balance sheet, and it owns Class A assets with attractive growth prospects. Therefore, I wouldn't have any problem buying this REIT at the right price. In fact, we bought a lot of shares of this company following the crash of the pandemic in 2020. But the problem of this REIT today is its valuation. Over the past 2 years, its share price has been mostly flat, even as most REITs saw their share prices crash. And the consequence of this massive outperformance is that its valuation today is excessive relative to most REITs. Today, REITs are priced on average at around 13 times FFO, but Welltower is priced at over 24 times FFO. I think that Welltower deserves to trade at a premium valuation, but the gap here has just become excessive. Welltower actually has a close peer called Ventas, which is very similar in quality, but today it's priced at just 15 times FFO, so there is a nearly 10-time gap in their valuation multiples. And we just don't see the point of buying Welltower or even Ventas because there are quite a few other healthcare REITs today that are very attractively priced. To give you an example, Healthcare Realty, which is the leading medical office building REIT, is today priced at just 9 times FFO, despite having guided to grow its FFO by 5 to 7% in the coming years. Another good example will be Alexandria Real Estate, which is the leader in the life science sector. It's today priced at 11 to 12 times FFO, and again, it has also guided to grow by about 5 to 7% in the coming years. Both of these REITs own Class A assets, they have strong investment graded balance sheets and attractive prospects, but the valuation multiples are more than 2 times lower. Again, I think that Welltower deserves to trade at a premium, but the gap is just excessive, and for this reason I wouldn't buy this REIT today. And then the second REIT I would avoid today is called Industrial Logistics Properties Trust, ticker symbol ILPT. Lately, I've seen a lot of people in the comment sections of my YouTube videos say that they are buying this REIT because it's the cheapest industrial REIT, trading at just 8 times FFO. Today, the industrial property sector is performing really well because it benefits from the growing trends of e-commerce as well as onshoring. As a result, most industrial REITs like Prologis are today priced at over 20 times FFO, but Industrial Logistics Properties Trust is the exception, trading at just half of that. But there is a catch, and the catch here is the management. Industrial Logistics Properties Trust is externally managed by a company called RMR, and this is a notoriously poor REIT manager that has a very poor track record. They manage several different public REITs and they have all performed really poorly since going public. In my opinion, this is because this management team is conflicted and more interested in growing their fee income than producing shareholder value. They have consistently made poor decisions by over-leveraging their companies, making poor acquisitions, and issuing a bunch of equity at highly dilutive prices. And so this REIT may own great assets, its valuation may be discounted, but none of that matters if the management is going to ruin it for you over the long run. Just recently, RMR decided to merge 2 of its other REITs together in a transaction that really, in my opinion, made no sense whatsoever, but this would preserve their fee income, and I think that this was their primary motivation. The market hated this deal, both REITs crashed, and it really wouldn't surprise me if they tried to do something similar in the future with Industrial Logistics Properties Trust. And then on top of these management issues, I would add that this REIT is heavily over-leveraged, and this is a major concern in today's rising interest rate environment. And so for these reasons, I think that the low valuation is well deserved here, and I don't think that Industrial Logistics Properties Trust is nearly as opportunistic as it may seem on the surface. So this is just to show you that not all REITs are worth buying. This is a sector sector in which you need to be very selective because there are a lot of value traps that could cost you a lot of performance over the long run. I invest about 50% of my portfolio in 25 REITs that I've cherry-picked from a universe of over 200 companies. It's by being so selective that I've managed to outperform the REIT market averages over the long run. Now, if you want to access my entire REIT portfolio, feel free to join my REIT newsletter, High Yield Landlord, for a 2-week free trial. I'll put a link to it somewhere in the description of this video. And finally, once more, if you could like the video, that will really help me a lot to grow this channel. Thank you so much for your support, and see you at my next one. Bye-bye.